to have a welcome note to the address to the members. Mr. Ramanand Prabhu. Ramanand Prabhu. I think I can change speaker view. Prabhu bhai. How we can change that people.
Hello.
Hello, Prabhu bhai. Oh. Yeah, Prabhu bhai, you can speak.
Okay. Thank you, Raviji.
Yeah.
Good invitees, guests, members from our overseas chapters, members from Muscat chapter, my fellow MC members, speaker of the day, CA Sanjay Chaudhary ji. On behalf of the Muscat chapter, it gives me great pleasure to welcome you all for today's webinar on COVID-19 impact on IAS16 and IAS36. Today's learner speaker, CA Sanjay Chaudhary ji, will share his insights about the two accounting standards and its impact on COVID-19. On behalf of Muscat chapter, we will welcome you all for this webinar and your active participation. Recorded version of the webinar will be available on our YouTube channel. Please post your questions on the chat box and our speaker will answer them at the end of the session. Welcome each one of you and wish you happy learning. Stay connected with Muscat chapter. Look forward to your continued support. Please take precautions, stay safe, stay healthy, stay ahead. Without further ado, I request Raviji to take over the proceedings of the meeting. Thank you very much. Over to you, Raviji.
Okay, sir. Thank you very much, Prabhu bhai. Thank you. Thank you very much, Prabhu bhai. Hello. Hello, Prabhu bhai, you speak?
Yes, go ahead, go ahead.
Let me invite CA Manish Jain to speak about the talent search drive. Manish Jain, CA Manish Jain will speak about the talent search drive and give you the insight to the members on the talent search drive.
Good evening, members. In fact, this is a series where we are searching for chapter members who can drive our profession or related topics for the enhancement of knowledge and skills. So in this series, our CPE chairman, Mr. C. Ravi, has, I think this is the first event where in this series we have conducted this program with the CA Sanjay Chaudhary. So in these efforts, we will continue to conduct some more events to enhance our professional skills. And we would like members to put their comments and further names. They can propose further names so that we can continue with this drive. So with this note, I would like Ravi to take over for further proceedings and introduction of the speaker so that we can go ahead with this program. Thank you very much.
Thank you very much, Manish, for a brief introduction on the talent search drive. Definitely this talent search drive is meant for the members. I request all the members to come forward with their talents and give us your inputs that we can speak on with the topic name and then your details, so that we can work on it. That MC will have a right to select the topics and of the interest of the members and time schedules. So we'll work on this and we'll look forward your support in this drive to get successful. Okay, now going forward, I request CA Jim Joseph to formally introduce the speaker. Speaker is yet not joined, sir. We'll wait for a couple of minutes for him. So Prabhu bhai, can we have something to discuss with you, or can we take some questions from the members on the talent search drive, sir, before until the speaker?
Yeah. What are the you take what are the suggestions or any members interested?
Yeah. So
Ravi, meanwhile, you can highlight the next programs.
Next program, yeah.
Yes,
So,
so that members we ready for the.
Perfect. So to start the continuity of the event, let me announce some of the announcement. Mr. Sajeev Surendra is there. Sajeev, are you there? Sajeev, are you there? Okay. So let me speak on 15th of August. Our next event is on 15th of August. 15th of August, we are keeping the Independence Day in the morning 10. We will be having the Independence Day celebration along with these latest update on the IFRS as a CPE event. It will be presented by CA Sajeev Singalji, who is the Central Council member of ICAI Delhi, and we are honored by Mr. Nihal, who is the vice president of the ICAI Delhi, honoring us by joining for this event. So this is the first event on 15th of August. After that we will be having on our knowledge series on the artificial intelligence, which is be done by the Dr. Arjun. Arjun is representing from Delhi and is well experienced. We'll share details with you shortly. Okay. After this, on 5th of September, we want to celebrate the Teachers' Day event, when we will be organizing one of the panel sessions, the cost optimization and sustainability under COVID circumstances. We are looking forward for the panel members in this regard, and we'll come up with the complete program in the due course. With this, I seek everybody's support in organizing our events, and your support is always there. We are actually keeping 3 events all the times. So with this note, Mr. Sanjay Chaudhary has joined. Welcome, Sanjay Chaudhary ji.
Thank you. Thanks, Ravi ji.
Yeah, perfect. So
welcome, Chaudhary ji.
Thank you, and I apologize for the delay. Actually, just I have reached. That's why I am a bit late.
No issues.
And I apologize.
Okay, no issues.
No, we were worried that you will be, in the lockdown.
Perfect. So we, now I request Jim Joseph to formally introduce the speaker to the event and welcome him to the session.
Thank you, Ravi ji. And a very good evening to all. I'm so happy to introduce our young friend, Mr. Sanjay Kumar Chaudhary. Presently, he's in Sohar. He's the finance manager of Jindal Steel. He's basically from Bihar. Mr. Sanjay completed his studies in Kolkata and he qualified in 2009. He came to Oman a couple of years before, and he's having the experience of working with the MNCs like Aditya Birla Group, Kohler, etc. He have published some articles in Tax Guru on accounting and other matters. And Sanjay is also a diploma holder in IFRS from ACCA UK. With these few words, I welcome Mr. Sanjay. Over to you, sir. Thank you.
Thanks a lot. Thank you. And thanks for giving me the opportunity to discuss such a good topic with under the COVID-19 circumstances. Let me just open my PPT. I'm not able to share my PPT. Can you allow me to share?
Raviji.
Yeah.
You make him post.
Yeah. Please, you can share your screen, sir.
Yeah. Yeah. Thank you. Thanks once again. And good evening, friends. We all know that the COVID-19 situations are arising, and the magnitude of its effect is so huge. Just 4 months back, we were analyzing a report, and we were analyzing that at that point of time, the magnitude of the loss, the global economy, would be around $1 trillion. This was 3-4 months back when it had started, around probably in the month of I think March. I think now the situation have also worsened. In that scenario and in that circumstances, it becomes very much imperative to really assess our financials as an auditor and as an auditee too, that where we land at in terms of our financial statement. As we all know that we all are the professional chartered accountants, professional accountants, and we are guided by the very basic principles of the integrity, objectivity, professionalism, confidentiality, all these things we are very much guided by. And we are also guided by one of the most important things of our professional behavior is that we are responsible for presentation of the true and the fair financial statements. That is the basic purpose of whether it is a professional accountant and whether it is an auditor, whatever manner we are performing. But this is our basic objective, to perform a true, to give a true and the fair opinion on the financial statements. As an auditee, also we are required to prepare in the manner so that it would be helpful to the auditor to prepare to give the true and the fair financial statements, opinion on the true and the fair financial statement. That's why it becomes very much imperative to understand all the relevant topics which have been affected or which is going to be affected under the COVID-19 circumstances. Amongst them, we have selected these two topics as this is very much important in terms of the our balance sheet. See, all the persons who would be working in the manufacturing industry or the manufacturing organization, they must be knowing that around 70 to 80% of their total assets would be constituting by the your non-current assets, and the major constituents of the non-current assets is your property, plant, and equipment, basically. That's why we are trying to cover here some of the parts of the IAS16, some of the parts of the IAS36, and then what are the activities which the management are supposed to do with respect to these both standards under the COVID-19 circumstances. First, in this presentation, I have segregated into the three parts mainly. Part one is the IAS16, that is the property, plant, and equipment. Part second is the IAS36, and third part would be the COVID impact. Meanwhile, between the presentations, if some of my friends feel to ask any questions, they can ask the questions, so that it would be it would be a deliberating session. First of all, I would be covering IAS16. Just a minute. Yeah. See, IAS16, this is a very basic accounting standard we all know, but just I wanted to have a quick look in the International Accounting Standard 16 as because for understanding the impact under the COVID-19 circumstances, this standard becomes very much important. The definition becomes very important. Its applicability status becomes very important. Henceforth, I would start from the applicability status. So see, the International Accounting Standard applies to all kinds of the property, plant, and equipment, except there are the few things which are not being covered by in the IAS16. What is that? That is the first one is the biological assets. Why biological assets? Because these there is another accounting standard, IAS41, that is being covered, and this biological assets is being covered by the International Accounting Standard 41. So that's why this is not being covered here. Then the property, plant, and equipment classified as held for sale, this is also covered under the IFRS 5. So that's why this is also not covered here. Exploration and evaluation and assets, and the mineral rights and the mineral reserves. See, what is the definition of the PPE? We all talk about the PPE, property, plant, and equipment, but what is the definitions of the property, plant, and equipment? See, the property, plant, and equipment, as the name suggests, this is an asset. As the field comes, this is an asset. But what kind of the assets this is? This is an asset which is held for use in the production. This is being held for rendering of the services. This is held for rental purposes and for the other administrative purposes. This is the one basic condition. And what is the second basic condition? The second basic condition is that its life is expected for more than 1 year. We are expecting that the assets would continue for more than 1 year. So these are the two basic conditions. Any of the item has to comply with to be covered under the PPE. Then see, we have defined that what is the PPE, but yes, what is the recognition criteria of the PPE, when it needs to be recognized, what are the point at the time when it needs to be recognized. See, the recognition criteria of the PPE is that it's the benefit or the economic benefits should flow to the entity. Why? Because obviously, if an asset is being recognized in our books of the accounts, then obviously it should be beneficial to the organization. Non-beneficial if the assets is non-beneficial to the organization, then there is no point in recognizing it as an asset. So that's why the first criteria for first recognition criteria is the benefit should flow to the entity. And the second recognition criteria obviously is the cost. Cost needs to be reliably measured. Cost needs to be reliably measured, because obviously if you will not be able to measure the cost, then how it would be recognized in your books of the accounts. So that's why these are the two basic recognition criteria. And one thing you know that these are the criteria and these are the definition. These two parts are very important. Why this is important? Because the definite for any items to be classified as the property, plant and equipment, it has to classify the definition part first, and the second thing is that it has to classify the recognition criteria. And see, we have mentioned that the cost can be measured reliably. Cost can be measured reliably, but what is the cost? See, I have segregated the definition of the cost into the three parts. What are the parts? Number one is that the first part is that amount of the cash or the cash equivalents paid. Whatever you are paying as cash or the cash equivalents, it may not be in the form of the cash, but it is equivalent to the cash. That is your cost. Second part is that fair value of the other consideration given to acquire an asset. Supposing in the circumstances where an item is being sent for refurbishment and what is happening that your old items are being taken by the vendors, and instead of the old items he is giving you the new items. Then what happens in that circumstances? Obviously we are giving one assets in consideration of the another assets. So that's why what should be the cost here? Then the cost is the fair value of the other considerations given to acquire an asset. Third one is the amount attributed to that assets when initially recognized in accordance with the specific requirement of the other IFRS. If any amount is attributable to the assets, then that amount would be taken as or it would be regarded as a cost. Measurement at the recognition. How we should measure the cost. I would like to just relate this with inventory as well. There was in inventory there is a paragraph in which it is being told that all the cost necessary to bring the inventory into present condition and the locations constitutes the cost of an inventory. Like this is also similar. But what is the difference? The difference is that one difference is there. I have not mentioned in the PPT, but one difference is there that all the costs necessary to bring the assets into present condition and the location as intended by the management, all these costs constitutes the assets. So that's why what should be the component of the cost? The component of the cost is the purchase price, excluding refundable duties and the taxes. Obviously, the net purchase price which we are paying, that each are component, one of the component of the cost. Then the directly attributable cost, then the cost of the dismantling and removing the item and the restoration of the site. Why cost of dismantling and removing the item and the restoration of the site? What happens that in some of the circumstances, supposingly that you have taken an assets, or you are using an assets, and it is the precondition of use of the assets that at the time of the when the assets will be disposed of, all the cost, or means all the environmental cost and other cost, or other things which have generated there, that needs to be dismantled and that needs to be removed. And for removal of all that, you can say that it's a garbage or whatever things would be generating, and as per the contract we are supposed to remove it. The cost for dismantling and removing of that item needs to be capitalized with an asset, and obviously the simultaneous provision needs to be made with respect to that as well. One important aspect of which I wanted to cover here, that what happens in the circumstances, we have understood the cost, everything, but say for example, there is a vendor with whom we are purchasing an assets at say $1,000, whereas that vendor sells the similar assets to another person or the another company at $800. Why? There is a slight difference that we will be paying to that vendor after the period of the 6 months, whereas the normal credit period of that supplier is only 1 month. Then what happens? What is the logic behind this, and what is happening behind that transaction? The real thing which is happening behind that transaction is that in substance we are getting the assets financed because what is happening that we in a normal circumstances we were supposed to take the assets on a credit terms of the 1 month, whereas we are taking the assets on a credit term of the 6 months. It means that we are getting the assets financed. It means that we should not book all the amount paid as an assets, rather we should try to recognize the interest cost imputed in that transactions. So that's why we are supposed to impute the interest cost in that transaction. And how the interest cost would be imputed? To the interest cost would be imputed in using this method of the equations, like whatever the total amount which we are paying and whatever the equivalent cash price is there, and the difference of the both is the interest cost, and that would be charged over the credit period. Any question till now?
Yes, Sanjeev, I have one question. As you mentioned, this asset is held for 1 year. I think in a standard it is mentioned as 1 period, and nowhere the standard is defining what do you mean by 1 period.
Yes, you are correct. So in the assets,
how can you define this 1 period? What do you mean by 1 period?
See, see, the period means, see, the assets define 2 things. One thing, first one is that over the more than 1 period, that is the exact wording of the standards. Yeah. Second thing is that the more than one production cycle. See, the more than one period means it is interpreted that one period involves the one accounting cycle or the one accounting period. So that's why I was stating that it's more than one period means more than 1 year approximately.
So somewhere we can get reference in means framework or somewhere else in guidance where the standard is defining this exactly, how we can go for 1 year or more than 1 year like that.
Reference wise, I need to check it out because I need to check it out. I'll check and then get back to you.
Okay, no
But in a general understanding and the general parlance,
yes.
one period is 1 year. It is being considered, and one production cycle means the production cycle which have been defined. Like if you are purchasing an assets and it has been defined by the original equipment manufacturer that the one production cycle is say it's a 10 lakh units or the 15 lakh units, then you have to consider the 10 lakh units or the 15 lakh units. So that is the idea behind that. But obviously I'll check the reference and we'll get back to you, sure.
Thank you.
Thanks. Then in the case that when the assets are acquired in exchange for the another assets, then how it needs to be accounted for in our books of the accounts, then the accounting treatment should be, we should try to consider first that the fair value of the assets given up. Second, if it is not available, then the fair value of the assets acquired, and in both of the circumstances and both of the items are not available, then in that circumstances carrying value of the assets given up, because obviously the carrying value in any case would be available, and that would be the cost for the new assets. And one thing we must take care of that there must be the commercial substance. Commercial substance, what does it mean by the commercial substance? Can anybody elaborate about the commercial substance? If because I think then the whole discussion would be more interactive, I think. Okay.
Anybody wants to raise their hand? Please raise your hand so that we can allow you to speak. Or please unmute your mic and speak if you want to have some questions and you want to ask some things. Or
okay,
it's clear to okay.
Thanks. See, what is the commercial substance? Logically, what does it mean by the commercial substance? In general parlance, we can say that the commercial substance means that transaction which is having some commercial meaning. Say, for example, if we are exchanging one assets and if we against the another assets, and none of the value is getting generated in the organization, then does it have any commercial substance? I think that no, there is no commercial substance, because the commercial substance would be said to have prevailed in the circumstances when there is some differences in the economic activity. There is some differences in economic value generations of the organization. So that's why with respect to the transactions like this, we need to see the commercial substance. What measurement after recognition? How do we measure the assets after recognition, after initial recognition? Then at the initial recognition or at the time of the initial recognition, we are supposed to measure the assets at cost. But after the initial recognition, there are the two models which can be utilized or which can be used by an organization to measure their assets. First one is that the cost model. What is the cost model? Cost model simply states that the cost model cost accumulated depreciation minus impairment loss. Impairment loss we'll be discussing in the detail in the onward slides. And the second one is the revaluation model. Why do we need to revalue the books of the accounts? Sorry, why do we need to revalue the property, plant and equipment? The property, plant and equipment needs to be revalued, or organization wants to revalue to show the correct equity of the organizations. Why correct equity of the organizations? Obviously, your equity is represented by an assets and the liability, obviously, or external liabilities. That represents your equity. But in the circumstances, say that your assets have gained a higher fair value, then your CFO wants to show the correct picture of the equity. In that circumstances, he would like to get all the property, plant and equipment, or the class of the property, plant and equipment revalued. This is the practical example in the case of the Jindal Sahib. We have done the revaluation in the Jindal Sahib in 2018. So we wanted to show the correct equity, value of the organization. That's why we had done the revaluations. And how the revaluations are being done? Revaluations are being done using the fair value model. And how the fair value is being ascertained? See, as per the IFRS 13, it is stated that there are the three levels, and the one of the level can be used to arrive at the fair value. That is the level 1, level 2, and the level 3. We'll be discussing in the detail in the next slides or the next slide. Yeah. And revaluation of the assets. What is the condition for the revaluation of the assets? The condition for the revaluation of the assets is that the fair value can be derived, and there is a very logic behind that. That unless and until you derive the fair value, how you do the revaluation. So that's why this is a very logical that the fair value needs to be available for doing the revaluation. And the second criteria is that the whole class needs to be revalued, because the International Accounting Standard 16 specifically says that this selective revaluation would not be permitted. So that's why the whole class needs to be revalued.
Sanjay ji, there is one question coming from one of the members, that should restoration cost of site to be included in the cost of assets, or a separate provision to be made for that? I feel including this cost in the asset may affect the cost of assets and production cost, etc.
Can you repeat? Actually, I couldn't.
You can see the chat box. Should restoration cost of the site be included in the cost of asset, or a separate provision to be made for that? I feel including this cost in the asset may affect the cost of assets, production cost, etc.
Yeah, actually, he's asking about the, and very good question. He's asking about the installation cost. Obviously, installation cost needs to be capitalized with the assets. Why? Because as I have stated that all the cost which is required to bring the assets into present condition, the location as intended by the management, that needs to be incorporated as an asset. So that's why without the installation, without incurring the installation cost, will not be able to use that assets. So henceforth, that installation cost is required to be classified as an assets. Could I give the answer?
Yeah, Hemanji.
Sorry to interrupt. I think the question is regarding the site restoration, not about the installation.
Okay. Site restoration cost. Okay. Yeah, site restoration cost is also required to be included in the assets. Why? Because if it is as per the contract that after the usage of that assets, we need to restore the site, then we need to ascertain the cost of the restoration of the site, and that cost needs to be capitalized with the assets. And if it is to be paid, say if this is to be expensed off after at the end of the life of the asset, then in that circumstances you need to do the provisioning of the same. So that's right. Just I want to add something also, that the site restoration cost, which is due to production of the inventory, in that circumstances, that would be charged with the inventory and not with the assets. But as from your question, it suggests that you are talking about the site restoration cost for site restoration cost due to usage of the assets. In that circumstances, it should be capitalized with the assets. Am I clear?
Hemanji, can you unmute yourself?
Hemanji?
Even in as you said, the site restore, cost of the site restoration, in case if the the period of the life of the asset is 5 years. Okay, now the current rental agreement where you are going to install this machinery and it is only 2 years. In which case, how do you capitalize, and what is the there is a associated risks and the cash flows and the timings and the amount. How do you handle this condition?
See,
You got
in that
mismatch. There is a timing difference.
You said that there is a rental agreement for 5 years.
Only 2 years, whereas asset, your economical benefit of the asset is 5 years.
Okay.
And the associated cash flows, how what is the treatment? How do you handle this scenario?
Yeah, see, in that circumstances, since we have the rental agreement for the 2 years, asset is for the 5 years, then what we will be doing? If with respect to that question which Hemanji had asked, I think that this is related to that question. In that circumstances, what will happen, that after the 2 years, we there would be a contract between the parties, that after the 2 years we need to take these assets out. Understood? Then in that circumstances, and if the party have stated that you need to restore my site, then in that circumstances, what we are supposed to do? In that circumstances, we should capitalize this. This is the first answer. Second question, your second question is that how the economic benefits would come, how the cash flow would come. See, this is the business justification. Obviously, I think that if somebody would be installing or somebody would be entering into a contract for 2 years, knowing that that the life of the assets is the 5 years, then he must be entering thinking that there must be a huge profit. Otherwise, he would not enter, because there would not be the commercial substance. This is my perspective. So that's why, in that circumstances, there is a economic benefit. Obviously, that's why he is incurring. Otherwise, his cash flow or his financial model would have suggested not to go for that rental agreement. So that's why I think that there is an economic benefit. First, second thing is that if the contract states for the restoration, the cost would be capitalized. This is my perspective.
Thank you.
Thanks. Yeah. We then we have done the evaluation probably, and what should be the Raviji, how much time we have? Actually, we have
half an hour we have, sir. 7:30 to 7:35 we can finish.
Half an hour more we have only.
1 hour only means 7:45. We are actually keeping 6:30 to 8 o'clock. So 7:45 we'll start that concluding remarks. So 7:45 is the time. So we have 1 hour.
Okay.
So around 45 or 50 minutes you.
Yeah.
Go ahead. Go ahead.
Go ahead, sir. We are with you.
Okay, thank you. Yeah. Thanks a lot. Yeah. Then the accounting treatment of the revaluation surplus. What the accounting treatment we should do for the revaluation surplus? See, the revaluation surplus have generated, and the revaluation, how the revaluation surplus first generate. The revaluation surplus or the revaluation loss, how it gets generated. See, the revaluation surplus is the excess of fair value over its carrying amount. That is the revaluation surplus. And what is the revaluation loss? revaluation loss is the deficit of the fair value over its carrying amount. That is the revaluation loss. But how the accounting should be done for the revaluation surplus and the revaluation loss? The revaluation surplus, if there is a revaluation surplus, it should be routed through the other comprehensive income, not through P&L. It has to be routed through the other comprehensive income. Okay, first. Second thing is that if the revaluation surplus is a reversal of the revaluation loss, in that circumstances it would be taken to the comprehensive income, that is to the P&L account. Okay. And the vice versa is the situation in the revaluation loss as well. If the revaluation loss is there, it has to be routed to the profit and the loss account. And if it is the reversal of the revaluation surplus, then you need to take it into the other comprehensive income. And there would be the corresponding deferred tax assets and the deferred tax liabilities as well thereon. So you have to recognize that deferred tax assets, deferred tax liabilities over the revaluation surplus or the revaluation loss. So that is the accounting treatment. Transfer from the revaluation reserve to the general reserve. Why I want actually the purpose for putting this thing transfer from the revaluation reserve to the general reserve is that one of the bankers was asking me that whether why we are doing this and whether this is available for distribution as dividend. The question was yes, that was available for distribution as dividend. And secondly, as per the International Accounting Standard 16, the difference between the depreciation on the revalued amount and the depreciation on the original carrying amount should be transferred to the general reserve, but it has not to be routed through the profit and the loss account. So that's why what the entry basically we accountant generally pass for doing this. What we do that we generally directly we pass an entry that the revaluation reserve debit and to the general reserve credit. That is the basic entry that we do. And obviously the transfer amount is available for distribution as dividend. De-recognition, like recognition, when we'll de-recognize the assets would be de-recognized when the future benefits cease to exist, and obviously on the disposal and the sales. See, we have recognized in our books of accounts the property, plant and equipment. We have done the revaluation, all these things we have done. But then the circumstances comes for the impairment of the assets. And what is the impairment of the assets? See, the impairment of the asset, this is the applicability status. So that's why I would not be covering in much detail that it would not be applicable on the inventories, contract assets, and the assets arising from the cost to obtain earnings, like IFRS 15 assets like this, and assets arising from the employee benefits, financial assets, investment property. Because for all these items there is a specific international accounting standards or the Ind AS. So that's why these are not being covered here. But can anyone tell me that there is a revaluation loss, revaluation gain, then why do we need to have this accounting standard, impairment of the assets? What is the difference between the impairment of the assets and the revaluation of the assets? Because under the impairment also, what we are doing, we are bringing the assets into at its fair value, and in the revaluation what we do, we bring the assets into to its fair value. Then what is the difference? Why do we need this accounting standard? Can anybody tell, if anybody would like to tell?
Yeah, I think there are standards prescribing certain conditions under which we have to go for testing of impairment assets, even yes, though there are a lot of things, in fact, external or internal conditions. If these conditions are available, you have to go mandatorily for testing of impairment, and you have to provide the impairment loss accordingly.
Yes, sir. Yes, sir. Yes, sir. Yes, Professor, you are very correct.
Maybe
yeah, tell me.
To add on to this, again there is impairment. Is it on a permanent or is it on the base of now, like what we are undergoing now, COVID-19 impact? Okay, there is an impact on the value of the asset. There is an impact on the revenue generation of the asset. There is an impact on even the cash flows associated with the asset, and there is whole cash flow on P&L and on the balance sheet. It is all there, and it is on the permanent nature. Is it on a temporary, or is it a permanent? If it is a permanent, how long? This is to account this and then give the right.
Prabhu bhai, we have to always, every accounting period, we have to always assess this impact.
In correct, end of the year.
Yeah, that was very perfect. And just to add on one thing, just what my analysis suggests, this is my analysis, that why this is required, and because see, the revaluation gives you the it's a two-sided sword, revaluation, because your value can go down, your value can go up as well. Whereas in impairment, your value would always go down, because your carrying amount would never under the impairment. Your means carrying amount is the basic yardstick under which everything will happen. Okay, whereas in the revaluation, it's a two-sided sword. It can go up, it can go down. So that is the my analysis. That is my thought process. So that's why I think that the various standard setting body, I think, would have come with this. But whatever you have said, that was the prima facie objective. And this is my analysis only. This is my analysis. That's because I was thinking that why this and that. So that's why it came to my mind. Whether I'm correct?
I think correct. You're
yeah. Thank you.
Okay. Thank you.
I would be touching upon some of the definitions part, that is the carrying amount, cash generating unit, all these things, so that in the later part of the presentations that would give us a comfort. So what is the carrying amount? What is the carrying amount of an asset? Carrying amount of an asset logically is the amount at which the assets are being carried, and at what amount the assets are being carried. As we have already discussed, that the cost model and the revaluation model, only two models are there. On that model, on both of the, any of the model can be used for carrying amount of the assets. What is the cash generating unit? The cash generating unit, it's a very important definition. The cash generating unit is an identifiable smallest group of the assets which generate the cash flow, which is independent from the other CGUs. So this is the cash generating unit. In a simple terms, if I would say that if any assets is able to generate its cash flows on its own, it can be said as a cash generating unit. It can be said as a cash generating unit. But if that asset, supposedly, that is not able to generate its cash flows, then we have to check for group of the assets, which group of the smallest group of the assets which cumulatively generates the cash flows. Okay, so that's why this is very important definitions. We'll cover on the later part as well. What is the cost of the disposal? Cost of the disposal is the cost attributable for the disposal of the assets. Like if we have to dispose of an assets, like we have to incur the legal cost, we have to incur the taxes, we have to incur the other things. So that's why, with respect to only that disposal part only. If this is with respect to that disposal part, then it would be covered under the cost of the disposal. What is the fair value? See, IFRS 13 already states about the fair value. And what is the definition of the fair value? The fair value is the amount paid to settle an obligation, or amount received to after selling an asset in an orderly market transactions. That is our fair value. What the definition states, the fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So what are the basic conditions? The basic condition is that it should be the orderly transactions, and the transaction has to be measured on the date of the it should be the orderly transaction on the date of the measurement. What is impairment loss? Because all the definitions I'm not covering here, but some of the specific definitions which is very much important that I'm covering here. What is the important impairment loss? The impairment loss can be defined as the as the difference between the carrying amount and its recoverable amount. If what does it mean? Say if the carrying amount is the $100 and the recoverable amount is say $80, then it means that we are not able to recover that balance $20. Henceforth, that would be classified as an impairment loss. This is the impairment loss. Recoverable amount, what is recoverable amount? Recoverable amount is the higher of value in use and fair value. Fair value we have already understood as for what is the fair value, the definition part we have covered. And what is the value in use? Value in use will cover later on. But just I wanted to give a brief. What is the value in use? See, logically, if we will analyze the situation, then we will be able to understand that value in use is nothing but the value which the organization derives from its use of an assets or the cash generating unit. That is simply the value in use, because that is the value which we are generating from the usage of that asset. So that's why we call it as a value in use. Call it as value in use. This is the definition. See, as one of our distinguished member had already indicated that impairment, that we have to assess the indications that we have to assess the indications whether that exist at the end of or in any of the financial year with respect to any assets, and what kind of the indication for impairment of the assets. And this is very logical. If we'll analyze, then we'll be able to see that these indications, if really this happens, in that circumstances, we can get a feel that the assets can be impaired. So that's why it's a very thoughtful provisions, and that's why obviously that's why it has been incorporated in the standards. And what kind of the indications it may be? Indications may be the external indications and the internal indications. And what is the external indications? See, the external indications means the indications which arises from the external agencies or from the external environment, whereas the internal indications arises from the internal environment. What kind of the indications arises from the external environment? See, the indications may arise in the form of that significant reduction in the value of the assets have taken place, like what example can be taken? Like any of the technological example we can take. That's supposing that we had installed a plant on the basis of any of the technology, and that technology has become obsolete. So that's why the value of the equipment must have got diminished. So that's why this is the external indication. What kind of the other indications it may be? Second indication, it may be that there is a huge turnaround in the economy. So that's why your the value of the assets must have diminished. This is the second indication, second external indications. Third one, what it may be? Third one, it may be that the interest rate may have increased. Why the interest rate would increase? Because of the risk premium. Because of the risk premium, the bank would be asking for. So that's why the interest rate may increase. In that circumstances, the value of the assets would go down. If we all must be working on the financial model, all these things, this is general and the this we have seen that if we increase the discounting rate, then the present value of the assets goes down. Why? Because we are increasing the interest rate. In that, looking from that perspective, that reduces the value of the assets. The carrying amount of the net assets of the entity is more than its market capitalization. This is one of the external indications which the auditor and auditee all should consider while doing the assessment. And what is the internal source of the information? Internal source of the information is the internal news. Like supposingly, one incident happened in one of the plant that one of the vehicles met an accident with another vehicle. In that circumstances, what had happened, that there was a obsolescence, there was a physical damage for the assets. So that was the internal news, that henceforth it is being classified under the internal informations, internal indications. Then the significant changes with an adverse effect on the entity have taken place. Third thing is that the evidence is available from the internal reporting that indicates that the economic performance of an asset is or will be worse than the expected. These are the indications, and we have to understand that every year we have to assess that whether there any indication exists at the in that year with respect to the impairment of an assets. Every year we have to assess the indications, because see, I was analyzing the whole IAS36, and then what I got and what I understood that first of all, under the IAS36, there must be the indications. Then we have to compute the recoverable amount. And third thing is that the recognition, and fourth thing is that the disclosure part. So these are the only four parts are there in the IAS36.
Can you highlight on this interest rate portion? In fact, this is quite it is nowhere it is written that what exact rate we should take to check our technique for impairment, in which we will take a discount rate. What
Correct.
discount rate we should take means whatever banks are quoted, or we have facilities with the bank, that rate we should take, or what? How we can fix this rate issue?
Yes. See, actually, this thing depends on the judgment of the management, because this is the whole responsibility. Impairment testing is the responsibility of the management. But what we should consider and how we should take, actually, we have to analyze. Actually, logically, we should take the risk-free rate. That's it only. Risk-free rate. What is the risk-free rate? Risk-free rate is the rate at which the central bank gives the lending to the other banks. That is the risk-free rate. Okay, but you have to account for the risk which is prevalent currently in the economy. See, in the COVID-19 situations, what happens that currently risk-free rate, it may be 3%, 4%, 5%, whatever rate it would be. But under the circumstances, it is clear that the risk is very huge. The bank, if the bank would come to give you a loan, and obviously the bank will factor that risk in the interest rates, because risk needs to be factored, obviously, no? Because risk, how do we like equity जैसे निकालते थे ना कि in the equity portions in the CAPM approach we were using the pricing of an assets. So how we used to do this, RF plus RM minus RF into beta, all we were doing this, no? So beta was what? Beta was the risk premium. So that's why while considering the discount rate here, we need to consider the risk premium. Ideally, in a practical environment, what we should do, that the current bank lending rate to your entity, I think it should be considered and it should serve the purpose. Because if I'll go to the bank and in the current environment and I'll ask for the loan, obviously bank will ask for the higher premium, obviously. So then that needs to be incorporated. But one thing just I wanted to tell, that it is the responsibility of the management that they can fine tune the risk premium as well. If they think that no, I don't have this kind of the risk, I can fine tune this, then you can do this. And but you have to convince your auditor that the consideration of the risk premium plus RF, that is the risk-free rate, is okay. So that's why you have to convince to your auditor. Whether I could give you give the answer to your question.
Free rate will not be available to the organization by the bank. So is it not correct way if we take the rate, exactly the rate on which the bank would be able to finance the term loan or other facilities like that?
See,
Manish bhai.
Yes.
In Oman, the risk-free rate is Chaudhary ji. The risk-free rate is the rate which is given by the central bank on the government bonds. Okay, CPE bonds, whatever the interest rate, 5.9 or whatever the series or 6.5. Now that is the risk-free return. Okay. Coming to your question, answering your question of what is the risk premium, that risk premium is in the question is, other than the banking channel, do we have like private equity? Because in Oman we have very limited sources of funding. Okay, other than the bank, as Manish bhai rightly said, if your bank, whatever the bank rate, whatever on your term loan or the arrangement currently what you have, okay, or is it open to renegotiation, and then is there any window of opportunity where
yes,
buy this loan and then somebody is ready to switch off, swap, then you see whether what is the additional cash flows, and then whether there is a saving, if there is a potential saving, and what is the risk associated, okay, what is the transaction risk, then you make a decision whether it is okay to go or continue with the same or status quo.
yes.
No,
Okay.
again, standard is not defining somewhere.
Standard, sir, actually a standard does not suggest. Why? Because it has left on the judgment of the management, and because obviously the auditor would be there, auditee would be there, and you that depends on your judgment only. See, if I'm having a business in the Syria, then I would be using the very different kind of the discounting factors.
No, even nowadays, because of countries' rating is going good times recently below the investment rating, and it has put into junk. So the lending rates by the banks are very high nowadays. So
yes.
I think it would not be a correct idea to take a risk-free discount rate. And
yes,
so
that's yeah, correct. Very valid question. Actually, that I was.
Please comment on that. They will not accept this idea.
Okay, but
yeah,
if it is not there, there is a fixed FD rate, fixed deposit rate. Okay.
Okay.
In Oman, FD rate has shoot up for the last 3-4 months. It is gone, even FD rate. It is gone up to 6%, 6.5%. Banks are offering.
But what in addition to that, what my idea is that see, currently the rate have shoot up in the current economic environment of the Oman. Currently the rate
cost of funds has gone up, exorbitantly.
Yeah, so that rate you should use at the time of as a discounting factor. Why there is a logic behind that? Because obviously that risk factors you are incorporating. If you will analyze the whole situation, then you will get that the why the rate of interest have increased. Obviously due to the risk. That risk needs to be incorporated in the discounting factor. So that's why if you will be using the current interest rate, then I think there would not be any kind of the issue to the auditors. My thought process is that.
That is the convenient approach. In fact, so we can satisfy our auditors also that this is the rate at which I'm getting the facility or this borrowings.
Sir, actually, what I wanted to say that this is the rate at which I'm getting the facility. I'm something have some different opinion. I'm not saying that. I'm saying that this is the rate which reflects the current situations, which reflects the current discounting rate. My statement is something different.
In this case, we cannot equate all the organization. In fact, there is a huge variation in lending rate to one organization or to another organization. Because in addition to that, country specific in the same country, there is a organization specific variations are there.
Yes, obviously. Yes.
So it may be one organization may be getting cheaper facility, cheaper rate facility, and another may be getting at a higher rate.
Sir, again, I will be coming to that point that we should think about that at what is the current market interest rates. I'm not talking about like if there is a HUL, Hindustan Unilever Limited, and supposedly there is another organization which does not have the so much of the presence in the business world. HUL would have the lower cost of the interest, obviously, and the another organization would not have. Okay, but what should be the, and if they are into the same kind of the business, if they are into the same economic environment, same jurisdictions, then what rate the both of the organizations should use? As per my judgment, my perspective, both of the organizations should use the rate of the interest which is currently prevalent in that economic environment, I think. Because see, the risk factor is same, everything is same, only HUL is having the bigger business. This does not have the business. This does not have the bigger business. So only the difference point is that henceforth we should use the interest rate which should reflect the current economic scenario. And I think the interest rate at which the the bank is offering to their customers currently in the current economic environment, forget it that it is HUL or this one or that one, in that current environment, that rate should be considered for discounting purposes. My thought process is that.
Okay, sir, we can continue, sir. I think it's resolved. We can continue on the next point, sir.
Yeah. Thanks, but
Chaudhary,
very relevant question. Yes, sir.
I will not agree because each individual client has a risk profile differently. You know, what is the conglomerate risk profile is not the same with the risk profile of the startup. You got me? Irrespective of the current economic scenario.
I think Prabhu,
okay. I have a client A who will even borrow at 2% today's market. Okay, whereas I have a client B who has 9.5%.
Okay.
Okay, there is a huge, it is a client specific.
Then sir, just understood your perspective. I have understood. Then sir, tell me one thing, sir, that if your client A is there who is getting a loan at the 2%, and if the client B is there who is getting a loan at supposedly that is the
9.5%,
9.5% of the whatever means, assuming
LIBOR
that
plus,
yeah, LIBOR plus 5%.
yes.
Say. But they are doing their business in the same economic environment.
Absolutely.
Say in the Oman, okay?
Yes.
They are having the same product line of the business. Understood?
Correct. Yes.
And if I have to assess their recoverable amount or the value in use, if I have to assess, then and keeping in mind that risk factor which the due to the COVID which has arisen surrounding us, that needs to be incorporated, then what rate as a judgmental factor, what rate should we consider?
You have to see the profile of the client actually. Profile of his, what is his cash flows, what is his mortgage, and what is his assets, underlying assets,
yes.
Collateral. You have alternative cash flows and other businesses, and what
Perfect.
is whole businessman, the moment you say, the
Correct.
whole profile in 2 minutes today, intelligence system will throw you key whether I can, fund you or I will not fund you.
Perfect.
Okay. So, okay. Whereas the guy who has even this, I'm yet to, I'm not made up my mind to fund him. Even though he is 9.5%, I'm not interested to fund that.
Yes, understood. Your point well considered, but at the time of doing the discounting of the value in use, at the time of the computing the value in use, what factor we should consider, 9.5 or 2%?
It is 9.5%. It is a general rate for the industry, as you said. 2% may not be applicable for Oman.
Yes. So that's why I'm saying, sir, that there are the two options. Either you fine tune your cash flows or you fine tune your discount rate. Okay. If your client is able to say that, boss, what is happening, that I'm not going to get affected from the COVID-19 situation. Okay. I'm not going to affect from the country situations at all. I'm something different. Then a 2% discount rate is perfect for him. But if your client says, no, I'm going to be affected from the economic environment, from the jurisdictional environment, all these things, then your client is supposed to do either two things. Either he has to change his cash flow or he has to change his discount rate factors. But whatever situation it would be, he has to impute that risk into the value in use calculations, either in the form of the discount rate or in the form of the cash flow. That he has to do. So that was my point. Okay, sir.
Perfect.
Okay, we can continue ahead, sir.
Yeah. So indications we have understood. Then what should be the timing of the impairment testing? Timing of impairment testing for the intangible assets with indefinite life annually. We have to do the annually. No indications are required. We have to do the annual testing. Intangible not yet put into use, we have to do annually. Goodwill, we have to do annually. Other assets, as we have discussed, on the arrival of the indications. If you find that the indications for the impairment exist in the financial year, then we'll do the impairment testing. Item which should be considered in the value in use calculations. Value in use calculations, see how it's very logical that what should constitute the value in use and what should be considered in the value in use. First of all, how the value in use is being considered, how the value in use is being computed on the basis of the future cash flows, Then we have the something expectations about the possible variations in the amount or timing of those future cash flows. That is the probabilities. Probabilities in the cash flow, you can say. Time value of money, that is being represented by the discounting factors. Risk-free interest rate. Obviously, I have mentioned the risk-free interest rate, but the premium needs to be imputed here. The price for bearing the uncertainty inherent in the assets. Means that premium they are talking here, the price for bearing the uncertainty inherent in the assets. They are talking, it indirectly talks about the premium. And the illiquidity and the other factors. All these factors needs to be considered while calculating the value in use. What is the steps for calculating the value in use? Only there are the two steps. One is the numerator, second one is the denominator. Numerator is the cash flow, second one is the discount factor, and all the things roams around these two things. Cash flow estimation basis to be adopted by the management and the those who charged with the governance. See, this is the responsibility of the management to assess the indications, to compute the recoverable amount, and if there is an impairment, then do the accounting for the impairment loss. But what factors the management should consider at the time of the cash flow estimations? Management has to think, management has to use the reasonable and supportable assumptions comprising best estimate of the range of economic conditions. Range of economic conditions the management should use. Why I am telling this? The reason being that the two kind of the projections can be done. One is the traditional method. Second one is the expected, that is the estimated method. In the traditional method, only the most likely cash flow approach needs to be followed. That this is the most likely things which is going to happen, and on the basis of that, I will estimate the cash flow. Second thing is that in the estimation method, we do the 3-4 kind of the analysis on the basis of the probability, on the basis of the various weights. We do the analysis, we do the sensitivity, and then we arrive at the value in use calculation. Then we arrive at the cash flow amount. And obviously the explorations of the second thing which we use is the our budget forecast. This we use for cash flow projections, because the budget is the first line of things which gives us the feel about what the future would be, what the future situations would be. And then we have to explorate the projections using the STD or the declining growth rate or the discount rate. It should be growth rate, not discount rate. Why the standard specifically suggests about the STD or declining growth rate? Because we follow the principles of the conservatism. Like we are very conservative with respect to the income. That is the that is one of the prudence, I think, that we use while doing the accounting. Henceforth, we do not use the increasing growth rate. Instead, we use the declining growth rate or steady growth rate. But the increasing growth rate can be used if it is justifiable, if the management can justify that yes, my business is of such a nature that it will increase in the future periods, then they will use the increasing rate. Otherwise, we should use the STD or the declining rate. Estimates of the future cash flows. Future cash flows should be projected from only the continuing use of the assets. If some of the client says that we are doing this and we will be able to generate this much of the cash flow in the future periods, then we should not consider it, or as a management we should not consider all these things. Only we should consider the cash flow with respect to expenses which have already been incurred. Then the projection of the cash outflows that are necessarily incurred to generate the cash inflows from continuing use of assets. Means the whole idea behind is that in the current situation, the assets in the current conditions, how much cash flow it will generate. The whole idea behind this is that discount rate, it should reflect the time value of money, the risk specific to the assets for which the future cash flow estimates have not been adjusted. If the future cash flow estimates have been adjusted, then there is no need to adjust the discount rate. But if the future cash flow have not been adjusted, then we need to adjust the discounting rate. But one thing we need to keep in our mind, that the double counting of the risk should not be done. Like, we should not factor the risk in the cash flow, and again we should not factor the risk simultaneously. We should not factor the risk in the discounting factor. Recognition criteria. What is the recognition criteria? Recognition criteria is when the recoverable amount is lower than the carrying amount. Obviously, then the loss would come. What is the accounting treatment? If the impairment loss is there, it should be charged to the P&L. If impairment gain is there, and this is as a result of the impairment loss which have been charged to the profit and the loss, then it should be transferred to the profit and the loss. And if it is with respect to the revaluation surplus, then it should be transferred to the other. If the supposedly that there is an impairment gain or impairment loss against the revaluation surplus, then it should be charged to the revaluation surplus. Allocation of the impairment loss, supposedly that there is an impairment loss in any of the cash generating unit, then how the impairment loss has to be allocated for. That first the goodwill needs, first the impairment loss would be assigned to the goodwill, and then after, if the value is there, then in the respective then on the basis of the respective assets valuation, it should be the impairment loss should be allocated. Then these are the disclosure parts. More or less we have covered the property, plant and equipment and the impairments. But under the recent conditions, what the management needs to do, how we need to value, all these things we have to think. See, the triggering event with respect to the impairment is the impairment conditions. That was the 4 conditions under the external environment and the 3 conditions under the internal environment. We need to see whether that conditions has arisen under the COVID-19 situation. And if we see that this situation has arisen under the COVID situations with respect to any of the assets or the cash generating unit, then in that circumstances, what we should do, we should go for the impairment testing. And the impairment testing, how will we do the impairment testing? Impairment testing, obviously on the basis of the comparison of the carrying amount with the recoverable amount we'll be doing. See, in the current environment, the disruptions by the COVID-19 is huge. What kind of the disruptions the COVID-19 have done? That is the demand disruptions. We are into the steel sector, and basically there is a huge demand disruptions. There is a fall in the steel demand. There is again COVID has affected the supply chain disruptions, place of business disruptions. All these things have taken place. So actually, my question to the audience is that whether do we feel really that this COVID-19 is one of the indications, one of the external or the internal indications with respect to the impairment of the assets? Can anybody would like to answer?
Manish, Robin. Anybody raising hand, sir? No, Sanjay ji, we can continue this maybe.
Yeah.
We are running sort of, yes,
Yeah, sorry.
Yes, so
Yeah.
Raji Dubey is answering. Yes, it can be.
Yes.
Bhartesh ji, can you answer?
Yes,
Bhartesh
from
ji?
my
Yeah.
perspective.
It can be, because there could be, for example, we have got a plant, and that plant is now useless because of COVID-19 due to any reason. In that case, impairment can be taken.
Yes, and yes, exactly that answer I wanted to have.
Raji
Because
Dubey.
obviously the COVID-19, the effect of the magnitude of the effect of the COVID-19 is so huge that I think in the Oman some of the re-rollers would have shut their plant and would go their home, because the re-roller does not get any benefit. We are the integrated players, we have the benefits, but the re-rollers must not be generating the benefits in terms of the steel, or other small players must not be generating the benefits. So that's why I think that yes, this is having the huge impact, and we should start doing the impairment. We should start testing. We should go for the testing of the impairment. Actually, I wanted to why I have covered or put this slide, that this is the management responsibility. Just I wanted to tell that. This is the management responsibility to assess the indications, and if the indication exists, then to compute the recoverable amount and do the impairment testing. This is the responsibility of the management. This is discount rate under COVID-19 should incorporate the risk premium. Forecasting cash flows under the COVID-19 and approach, traditional and expected cash flow approach we have already discussed. With this, I would like to complete my presentation. If any of the distinguished members have any kind of the query, then please.
So anybody who wants to speak, just raise your hand so that I'll and unmute yourself and raise questions. Sir, we have 5 minutes or 5 to 7 minutes with that, where we can take two to three questions at least. So anybody want to raise any questions? So we have Ms. Sanjay ji will be answering those, or anybody has a question? Okay. Let's wait for them. Somebody. I think no. Yaspal ji is with us. Okay. Anybody has a question, sir? So, or with the permission of chairman, can we start the concluding sessions?
Yeah.
Yeah, we can start the conclusion. So, sir, we have Yaspal ji with us, very senior member. We like to have some remark feedback from them. Yaspal ji, can you come in and can you say something about today's event? Yaspal ji.
Yeah, thank you very much for organizing this, and for me,
Namaste, Yashwal ji.
Yeah.
Namaste. Can you hear me?
Yeah.
Yeah. So sorry, what is happening?
No, sir. We can hear you, sir. We can hear you. You can speak, sir.
Yeah, but okay, fine. So not a problem. Yeah. So thank you very much. For me, it was a lot of learning, and unfortunately, I had to switch on between two webinars and also my dinner. So I missed in between, but I then thought that I'll come back for the concluding session. So it was a very good session. And for me personally, it was quite a learning experience. I really don't have any questions to ask, but just to say a very, very good, and thank you very much.
Thanks, sir.
Thank you very much, Ishpalji.
Thank you very much, sir. So with this week, we want to wish you a thank you to
Ravi ji, Sanjay Tiwari ji hai.
Sanjay Tiwari ji nahi hai sir, left ho gaye. Mobin ji bhi left ho gaye. I thought that of them, but they left. Sanjay Tiwari ji nahi hai, Mobin nahi hai. Any other distinguished member would like to speak, sir? And any comment, any feedbacks on the talent search drive or anything which you want to share with us? You are please
COVID-19.
COVID-19 situation or anything which you want to share, please share with us, sir. We have some 5 to 7 minutes with us. We can ask somebody down. Let me see. Jim Joseph is there, Manish is there, Asis Kamdar is there, Jagannath, Datta Firoz Khan, Gabriel, Empathy, Jibu from Salala Port. Let's ask Jibu to Jibu ji, can you speak something, sir, about the event? Jibu ji.
Yes, I'm with you.
Yeah,
Yes.
It was a nice event.
Yeah.
Well addressed all the issues.
Yeah.
Thank you very much.
Sir, what about the talent search drive? Whether it's how you've taken the talent search drive? Is it a good idea? It's not effective, or like what is your opinion on that?
How many members from Salala is lined up? You should say.
Yeah. It's a very good initiative. All the best for this move.
Thank you, sir.
Thank
Thank
you.
you very much.
Thank you very much, Jibuji.
Yeah. Anybody else you would like to speak, sir?
From Salala, anybody? All.
And Sohar, let me see somebody from Sohar. Mr. Sanjay.
Avinash bhai hai?
Avinash ji nahi hai. Avinash ji. No. Utsav hai शायद. Utsav bhi nahi hai. And let's conclude, sir. Now I think
Okay.
Yeah. Thank you very much, sir. So with this, we just want to have the end of the session. And now I request Jim Joseph to just certificate, share the certificate of appreciation, and Mr. Chairman C. Ramanand Prabhu to speak some few words about the council for thanks. C. Ramanand Prabhu, you may like to speak.
Yes. Thank you very much, Sanjay Chaudhary ji, for your very interactive section. Session on IAS16 and IAS36, and to share your insights on the accounting standard and the current impact on COVID-19. Okay. On behalf of Muscat chapter, we will present you this e-certificate as a token of our love and affection. Thank you.
Thank you, sir. Okay. Thank you very much.
Over to you, Ravi ji.
Thank you, sir. Thank you very much, sir. We thank Sanjay ji. To conclude this event, I wish to thank the speaker, Sanjay Chaudhary, all the members who have participated in the event. Mr. Yaspal Mehta ji, who has joined from even in this busy schedule, he's joined us and he remembers us. So we want to special thank to Yaspal ji and all other members for their contribution towards it. And we look forward, all our members to come forward to us. And speak.
Thank you, CBFS. Thank you. Thank you, CBFS.
Thank you, CBFS, for the platform. Thank you, Zoom, for giving this facilities to interact virtually. And thank you all, sir. That's it. So I conclude this with the thank you to all. And thank you very much, sir.
Thank you.
Stay safe.
Thank you. Thank you very much.
Stay healthy. Thank you.
Thank you.
Thank you, ji.
Now also somebody is joining. Okay, thank you, sir. let's see. Sir, we have Yaspalji, we have the initiative of yes, the talent search drive. You were there that time of when we were talking about talent search drive. The basically the talent search drive is that we're speaking from the members, getting from the members the inputs that whoever our members, no, let's they come up forward to speak. Some members.
All right.
So we are working on this.
Excellent.
Yeah. So
I think it's an excellent idea. And, I am extremely glad that there were almost like 60 participants, which must be some kind of a record because, you don't generally have so many numbers. And it goes a lot to say that whatever you are doing has really caught the attention of people. And I wish all the future participants, and I also encourage people to come forward and show their talent. Thank you.
Yeah, Bharteji, are you still there? Bharteji asked that whether there is a very training officer. Bharteji, are you there still?
Yeah, I'm still there.
Yeah. So we will be organizing the VET seminar in the month of October. We will coming up with the knowledge series in the month of October on the VET series, sir.
Okay, sir. Okay. Thank you. Thank you.
So we are a lined up speaker with us, but we were just thinking that doing the VET seminar in this time may not add value when the things are not very clear from the government end. So by the October month, we will have some better clarity from the government. So we have lined up the VET seminars in the month of October.
Okay, sir. Thank you. Thank you.
Thank you very much, sir. I'm concluding this meeting, sir.
Thank you.
Yeah, thank you all.